I know trading is very difficult fam, but have you ever wondered why you keep entering too early or too late? It is because you don't understand market structure yet. I promise you guys that by the end of this video, you understand how to read market structure, identify trends, and catch vessels confidently. Hey traders, I am Ojong Joseph and I'm here to help you simplify price action so that you can trade with confidence and confidence. And if you're not yet subscribed to my YouTube channel, don't forget to hit the like button and subscribe to this YouTube channel for more and more videos like this. So all you need is a mechanical system for mapping out market structure, and whatever system you trade, be it smart money concept, supply and demand, EMAs, Fibonacci, chart patterns, if you apply the concept in this video, I can guarantee you three things. You're going to boost your win rate, because if you map the market the right way, you're going to find yourself in the right side of the market and you're going to get higher win rates. And number two, you're going to skyrocket your risk to reward ratio, because you're going to manage your trades a lot more efficiently. Reason being that, one, you know your target, and then two, you are going to hold your trades with a lot more confidence to the overall target. And number three, you're going to gain clarity because you know what exactly you're looking for. And once you know what exactly you're looking for, trading becomes more simple. And we're going to build everything from scratch all the way up. We're going to start with market structure, liquidity, entries, and trade management. All right. So overall, what we'll cover in this particular video will be market structure, the types of trend. We have the bullish, the bearish, and then we have the break of structure, change of character, and the practical chart examples. So without wasting much of time, guys, let's just go straight up to the chart so that I can show you exactly what to look for and how to actually understand market structure. All right. So mainly we're going to be looking at the basic market structure and the advanced market structure model. All right. So what is market structure? Market structure is a framework of price movement, of how price form higher highs. All right. You have highs, lows, and high, lows, highs. So basically, market structure is a framework of price movement, of how price form higher highs and higher lows in an uptrend, and then lower highs and lower low in a downtrend. So basically, this is how the market moves. But all this is in theory, because if market moves like this, everybody is definitely going to be a millionaire. So this is the bullish market structure. Okay, so all you're going to see is for you to continue to see the highs. Okay, and then this low should always be protected. Okay, the low should always be protected. It should not be invalidated. Okay, so that makes it what a strong uptrend. Okay, a strong uptrend, bullish market. All right. So, and secondly, here we have a bearish market, and what you continue looking for is market breaking structure to the downside. And anytime this high is taken out, that means there is a tendency for a change of trend. All right. So ideally, this is how the market moves, fam. So the market moves exactly like this. Okay. Why? Because the market will make a structure to the upside, will have a pullback and probably a change of character to lure people in. Okay, to lure people in, and then what happens? The market is actually going to take their stop losses before it continue to push to the upside. So this is how the market moves in reality. Okay, if it moves like this, everybody is actually going to be a millionaire. Okay, so this is the right way of how the market moves. All right, so we're just going to break everything down for you guys to actually understand. So why this is that is because some majority of the time people get this euphoria that whenever the market breaks out a particular area, is actually going to keep pushing to the upside. Okay, but in reality, that doesn't happen. It's not always like that. So you always have to wait for a pullback, okay, and probably a change of character for you to you have to wait for a pullback and a change of character, okay. You have to wait for a change of character. All right, for instance, now all these structures inside of this area, all the structures inside of this area here are internal structures and the external. So you have to trade with the overall external structure, okay. So I'm going to show you examples of these on the gold chart, okay. So guys, now that we are done looking at the theoretical nature of market structure and we have a brief understanding of it, and all this is basic, I know you have not pre-knowledge of it, so I just want you to bear patience with me. Let me unfold my trading strategy for you guys. So now that we're done with the basic, let's look at the deep stuff, okay. Let's look at the practical nature of these, of how to actually read market structure using the gold chart. So guys, now what I want you to do is I want you to post this video for a while and then observe this chart. You can clearly see that this market is actually bullish. Why? Because we can clearly see how the market makes highs and lows, highs, lows, highs, lows, high lows, okay. But looking at this like that, you can't actually trade it because it's kind of really tricky, okay. Where are you going to get your entry from, and where are you going to set your exit in case you lose and your target? All right. So because if you look at it like that, you can't really engage in this market. So I'm just going to break everything bit by bit for you. You can identify that this is a bullish market, all right. And with every new high form, we have a break of structure, okay. So the next thing we're going to identify is how to actually identify a valid break of structure, okay. To do that, you just give me a few minutes. I'm going to show you guys how to actually identify a valid break of structure. So if you are using the week to actually identify your break of structure, guys, you are wrong, okay. This is actually wrong, okay. Why? Because if this candle right here, okay, if this candle right here is not able to break out, close outside of that high, okay, that means the break of structure is not valid. You have to wait for the market to close outside of that area before you can actually identify that, okay, this is a valid break of structure. And say, okay, so right here, as you guys can clearly see that this is our valid break of structure. Why? Because this candle closed above, okay, signaling that, okay, this is a valid break of structure, a valid BOS. So that's actually how to identify a valid break of structure. All right. So secondly, now let's identify how to read your change of character, okay. Change of character. A change of character usually signals when a run may be finished and a pullback is starting, and when the pullback has finished and a run is starting. All right. So now we are assuming that this is an uptrend, and if it's an uptrend, know that the market is not going to keep pumping to the upside. There are going to be retracements, and those retracements comes in the form of pullback, and sometimes a particular low, higher low, may be taken out, okay. So this is our low, higher low, okay. This is another higher low. So sometimes a change of character can be used to signify what a change, a temporal change of what structure, okay, from being bullish to retracement happening, and then the market looking for a certain key level. All right. So for me, what exactly I do is that I wait for the market to actually get to my discounted area, like below 50%. So in this particular case, you can actually use the 50%, the 50%, the 60%. So for instance, now let's say I'm actually trading between the swing high and the swing low. Now let's look at that. So this is our swing low, and that high there is our swing high. So between these two areas, all right, if I open my chart and I mark my swing high to my swing low, and the market is somewhere there, I don't want to be buying. I want to buy what at the discount. Okay, so you want to pick your Fibonacci, you mark from the swing low to the swing high. Okay, so from the swing low to the swing high. So now the market retraces. You want the market to retrace to 50, 60, 70%. So anything above, anything below that is actually good, from 50% and above. And then you wait for a change of character. Okay, you wait for a change of character, and then you can use your order block, your candlestick confirmation, whatever method you trade, to actually engage in this particular market. So now, guys, let's look at some few examples using the gold chart, because mainly that's what I trade, the gold chart. All right, so I want to show you guys how to actually pick out the levels of area of interest, okay, and what exactly to look out for on gold once you identify the trend direction of the market. All right, so guys, now this is an area of interest for me. Okay, so this is my area of interest for me. Okay, so since this is my area of interest, I'm going to let's assume that when I open my chart, the market was so when I open my chart, the market was, it was here. Okay, when I open my chart. So now what I'm going to do is I'm just going to go to the smaller time frame. Let's say the 30 minute. All right, so that I'll be able to get a clear understanding of this. Okay, so from there, here's my swing low. Okay, and there is my swing high. All right, here's my swing low. I'm going to use this area, okay, as my swing low, and there to be my swing high. All right, okay, so I want the market to come back to a certain key level. Okay, so and here on this chart already, here's my key level, the 50%. Okay, so and already clearly there's a particular structure which I trade, and I'm just going to look for that here on the gold chart. All right, which is simply this. Okay, sorry, okay, all right, so this is the structure I trade. Okay, so all I want is I want the market to actually return back to here, and then I take it all the way up. So now that's simply what we are just going to be trading on gold. Now we're just going to be looking for, well, we have already marked our 50% discounted area. Okay, so majority of the time you can just set your alert on that area, so that you can just be, when the market strikes that area, you can just come to your chart and prepare yourself. Okay, so right here we have a sweep of liquidity. Why? Because the market actually made a high here. This was a low before that high, and the market came back and then took out that low. Okay, so we have a liquidity sweep. Next thing we mark out is breaker structure, which is clearly this. All right, and all right, let me just carry this to that. Okay, so the next thing which I'm going to look out for is my structural liquidity, which is simply this. Okay, I have a handful of strategies which I trade, but I trade only gold, man. So I don't want the stress, the emotional stress of, if you are focusing on too many pairs, the stress is going to be too much and so many impulsive decisions. All right, so now let's allow this playback a bit. I'll see what's going to happen from. Let me change it to the 1 hour time frame. All right. Okay, now let's see. We have more clarity on the 1 hour time frame, guys. So you can see. Let's see. All right, so now we have our market coming to our area of interest. Yeah. As soon as it just enters, your stop loss just below that swing high. Okay. Can you imagine the risk to reward ratio? That's what the strategy does, fam. And I would want to scale in on this trade. I'll show you guys how to do that. All right, so now I go to my 10 minutes time frame. Okay, this is how to actually manage your trades. Okay, we are in on this. So we're just letting this play out. Okay, let me try the 15 minutes time frame. There's something I'm always looking for. Nah, I can't see it either on 15 minutes, but it will definitely come up. There was no opportunity for scaling on this, so but we're going to continue. All right, so clean, simple strategy, guys. It's just clean. All right, so it's clean and simple. So now what are we going to do? You're not going to chase the market again after that. All you wait for is another pullback. Okay, all you're looking for is another pullback to a particular key level. Now we scale into a smaller time frame, because already you know the direction of this market. I remember this particular one here. Yep. I took it that was yesterday or some days ago. I'm going to upload the picture here so that you can see that. Okay. So here's an area of interest for me. Okay. Why? Because there was a sweep of this low. There was a sweep here. All right, since there's a sweep of liquidity there, all right, I'm just going to use this, but it's not up to 50%. I'm going to use this key level. Let me just go to the 5 minutes. So yeah, I'm not trying to fake anything here. Okay, so I'm just going to look for an area of liquidity. Here is cool. Here is cool. All right, so let's go back to our early time frame and play it. Okay, oops, 30 minutes. All right, we just want it to take its time to fall back. Okay. All right, so we have it where we want. I want to take this to the 10 minutes or probably the 15 minutes or so. Yeah, there are a few things which I look for. Continuation patterns. Okay, this is my continuation pattern which I'm going to look for now. So on the 5 minutes, and even today, this same pattern actually occurred. Okay, so we have a change of character right here. Okay, we have a change of character which is right there. Okay, we have a change of character. Okay, and we have our inducement zone. Okay, we have an area of inducement. Sorry about that one. So right here we have our area of inducement. Okay, so we have our inducement imbalance, inducement area. So now here we have our breaker block. Okay, so now I want to actually get in on this because I wasn't really comfortable with this area, so I want more clarity. Okay, so now let's wait for it to play out. All right, so after that I just want some rejection. Okay, so my stop loss is just going to be below that candle. I just want some rejection. All right, now is my entry. Okay, here comes my entry. All right, okay, stop loss just below those candles. And guys, I was targeting 210. Yep, after the 210 there was a very big pullback. So now let's go to the 10 minutes. Yeah, probably maybe 20 minutes or so. So It's looking good on the 10 minutes. All right, it's looking good. Let's just go to 30 minutes so I can just play out fast. All right, I can remember there was a scaling opportunity on this. Okay, yep. Let me just go back to the 5 minutes so I can actually use the opportunity for the scaling. Okay. All right, so now this is actually how to scaling on this particular strategy. Okay, you need an inducement level and a breaker block. Okay, a breaker block is a failed order block. That's what we used in getting in on this particular area here. Okay, breaker block. But except to it needs some form of rejection. It requires a lot of patience, guys. So right here, it can just tap on it and it just moves, just like this one. We have a breaker block, which is this. All right, so we have our breaker block, we have our inducement level. Okay, so that liquidity will be taken out. Okay, so since that's an inducement level, you can just like scaling on this and then same target. Okay, same target. All right, so gold is actually nice to trade, guys, but you don't have to focus on too many things. You just have to focus on one and then you actually master it, guys. So right there we have our target. Like I said, after the TP, there was a massive drop. So that was that. Okay, very simple strategy and easy to follow. Don't forget to hit the like button and subscribe to this YouTube channel for more and more videos like this, fam. Stay blessed.